The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start out the show today with a quick summary of the DAX, and then we're going to talk just a little bit about the stock market. I got a few other things we need to cover, but at the half hour, we're going to have our special guest, Norm Winsky of Astro Trends, coming on to talk to us. And first chart you'll see here is the German DAX, where we stood as of last Friday. And if you'll take a look at this, you'll notice the movement completed a perfect ABCD that was just about as perfect as you can possibly get. It then broke down quite a bit, stopping at the spot that we were looking at. So anyway, let's just move on and take a look at some more of these DAX charts. We'll move on to the 60-minute, and then you'll notice here on the 60-minute, this is the same chart, only it's looking at it over a longer time frame. Gee, that's really hard to figure out, 5-minute versus 60-minute. You'll notice the 60-minute went up to, actually it hit the 78% level from the high way back there on the 8th. So that's what that completed. Now, the last one we want to take a look at now, of course, is the daily, and you'll see this much clearer as you watch the daily here. You'll see a lot of symmetry here that is, I think, pretty interesting because the market hasn't really run away to the upside. So that's what we're looking at in the DAX index. Folks, regarding the stock market, if a nuclear explosion against your enemy does not make the market go down, it ain't ready to go down. That's basically a confirmation that technical analysis is pretty smart, because until these cycles are finished, news don't make a hoot, because this is really serious news, and yet the market shakes it off like it's nothing. Now, we're coming in to this full moon here on the 6th, which is tomorrow, so I don't think it's going to start going down till tomorrow, even though I think it's going to go down. But, that's just my opinion, of course, but we need to watch it. The retracements that we made in the New York Stock Exchange Index, I'll just bring this up to let you take a look at it. This is an hourly chart. It just fits in pretty nicely with what Gartley had to say about the patterns. Friday's high was a 78% retracement off the lunar eclipse, and we have all this stuff going on in the world, dangerous stuff. And this is what Bill Meridian spoke about when he was on last week, that this first few days of September bring in a lot of danger as far as military action. Now, I don't know how that's going to transform this stuff, but that's what it looks like, going on. Now, I wanted to share a chart from our good friend Arch Crawford that also we've seen it before, but I wanted just to reiterate where we are here. This is the chart of the 52-week highs versus the 52-week lows, and you'll notice here that this is not a really bull market, because we're not making new highs. We're making more new lows than we are new highs. You'll notice that green line comes in there. That's where that 200-day moving average comes in, where the number of advancing issues versus declining issues turns down. And if that turns down, that's a really strong signal that the market is going to go, Okay, now let's just take a look. Looking at what's going on here. Anyway, let's move on here. You caught me by surprise here. 1 second, folks. I have to catch my breath here. I need to talk just a second here about the euro, because we're at a very critical level in the euro, as you know. We'll put it up here. We're trading at around 119 right now. As you can see here on the weekly chart, you'll notice that we've made a 1.618 expansion and also a 1.27 expansion, and nearly a perfect 50% retracement off the high from these past years. But this was a straight up move, so any corrections are going to be short-lived as the market tries to find its legs. That's what it's looking at. Now, I've been asked to talk about what makes the foreign exchange markets move. The main thing first is the fact that we're looking at markets that are related to interest rates. In other words, these countries are interest rate sensitive, and if the rates go higher, that should make your currency be stronger because people have to come in and buy dollars in order to own interest rates. So it is interest rate sensitive, but there are a whole lot of other things that are involved. There's something like crude oil is another one for some of these countries. You know, that's a really big thing to watch, especially the Canadian dollar. So there's a lot of cross currents of all these things, and I guess that's why they call them cross rates. But the best way to trade them is just to look at the charts, and as you see them, you know, you'll be able to understand, you know, what's really going to happen is to see how that is going to take a look at. Now, when we come to the break, we're going to take a look at the euro versus the British pound, and also we're going to take a look at the Japanese yen. We're going to take a look at the Japanese yen right now because it's got a great deal of support here at the, let's just bring this up here 1 second. You'll see it has a great deal of support at this 109 level. We're trading at back to the 109 level right now. So just give me 1 second to, wow, 1 second, folks. All righty, let me get this up here, and we'll put this here to see if we can get it. Okay, now that's it. Of course, the Japanese yen, if there's a nuclear war, is going to be affected greatly by this. And just the threat of nuclear war is something to see how that's going to happen. Someone's asking questions. How important is it the euro hit a high of 120? That's several ratios coming in there. I don't know how important it is. You have to give it to see what's going on. We broke 3 points from there, which is not unusual after a big run up, but it didn't go down anymore. So I'm looking at it on an hourly basis. There's a lot of resistance at 120. There's support at 118. You know, that's the bottom line of what's going on with these markets. That's what it looks like. The one that's interesting here is, let me just show you this one. This was sent by our good friend over in Las Vegas, Mr. TB. And if we take a look at this one, this shows you the Japanese, wow, Larry. This shows you the Chinese renminbi, also known as the Chinese yuan. That's YUAN, trading at 6.52. Folks, when I first started going to China 18 years ago, it was trading at 12. In other words, you could buy everything in China at half off. Any of your clothes, you could buy custom-made clothes, anything you wanted. You could just get anything. Now we're trading at 6.52. That means Chinese goods are more expensive, and yet trade is still going on. The big, to me now, I remember now I have a degree in as an MBA, but I question the value of it. The fact that if we go into a trade war with China instead of a big war with Korea, this is going to hurt all of us a little bit. But that's a small price to pay to keep people from dying. They're going to have to stop China to help China to stop Korea. Otherwise, this thing's going to get worse. My opinion, off the soapbox, 877-927-6648.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, the next chart we're going to talk about comes from the Elliott Wave theorist, Robert Prechter's newsletter. And basically what it is showing that we have a record number of large speculators on the long side and a record number of commercials on the short side. That usually means that you're at some type of a top, but not always, of course, but it's an interesting phenomenon. It's basically another way of looking at fear and greed would be my guess, because commercials would be looking to put on hedges, whereas the others would be looking, to make money. We're going to get to gold just in a few moments, but I wanted to spend a second here also bringing this up from the Elliott Wave letter, because it had a really interesting chart all marked up for me. So he's done a great job, so I just want to bring it to your letter. This is a relation here of news to these hurricanes and stuff that we have. Look at oil prices before and after Katrina. Katrina came in on 8/29, right in the middle of the hurricane season, and you can see that's when crude oil topped, and then it had a big correction. So the news, really follows the trend, folks. That's why we're looking at this stock market. I don't think it's going to turn down till, it could be any time, because we're coming into this full moon. Remember, on September the 3rd, 1929, we had a new moon at that time with a very similar type astro signals that were there, but whether they correspond or not this time, we don't know. We'll have to wait and see. But that's what we're paying relatively close attention to as we look at these. Last week we mentioned the possibility of corn. It's had a really strong move. Soybeans have had a strong move. I believe this is related to this Chinese renminbi move that we're seeing, because the Chinese can now buy our corn and soybeans at 4% of a greater would be a greater price, so they can get a good. It would be an easier price to get. Now, someone's asked the question: what would invalidate my analysis in the stock market? New highs in the New York Stock Exchange Index. Like I mentioned before, I have to get on my little burro, Walter, and ride off into the sunset out here in the desert if it does that, because I will be totally surprised. And I get surprised a lot, but this one would be really a big surprise to me. What I think is happening is the same thing that happened in March of 2009. On the 5th of March, you remember, we bottomed and we had one heck of a rally in the stock market, about 250 points, and it turned around and went all the way back down to make a double bottom on the 9th of March, and then had the move up. So I think that could be the reasoning behind it. But folks, bottom line, I have not seen anything set up as easy technically as I've seen this now. And we're seeing confirmation in the VIX index that people are taking, the other side of it. But the other thing that, is really important is we're against the strongest seasonals that the stock market can have. That is, bottoms in September, October. That doesn't mean it can't do that, but it's certainly, that's what it appears to be doing. That's, the bottom line of what we're watching. So that's the main thing. Now let's switch gears here. We've only got another 5 minutes or so before we have Mr. Winsky come on the thing, and we'll be able to look at what's going on. Folks, we're coming into this full moon here on the 6th. That's tomorrow. And we have all these aspects. We got these Mars-Mercury aspects that Bill Meridian talked about are right over the top. Also, Norm Winsky's talked about these. These are very powerful, strong cycles. We have this negative seasonality. And if we do not turn down this week, this is the week. If it doesn't turn down through this week, this is wrong, and we could be going a lot higher. And there's always that possibility, and I say that because if the nuclear option, a nuclear bomb goes off, and the market doesn't react more than 4 or 5 points, are you kidding me? I mean, that doesn't mean anything. I mean, that's nothing. I mean, the last time the Koreans sent off a missile, the S&P dropped 25 points. If you remember, that was back on the 27th or 28th of August. And with an actual detonated 6 point something on the Richter scale, that ought to scare China, if nothing else. And it didn't react to the markets at all. Look at the DAX. It rallied also. So it's not ready to go down until, the cycles are done. And, maybe the cycles are wrong this time. I'm not sure. But all I know is that when it does go down, I think it's going to be substantial because of all these things that we've gone through. And, we'll see, just one at a time. But it's just a probability, folks. It's never a certainty. All right, let's take a look here at the silver first. You'll notice here last night in silver, we did hit 1802. Let's get this up here so you folks can take a look at it. And that was a very interesting pattern because it completed two ABCD patterns and a 78% retracement of the high in April. However, the gold is looking very much like it wants to. Hold on a second here. Oh, boy, I just got some great information. Wow, that makes my day. Hold on 1 second here, folks. Aha. There we go here. Let me move this up here. This little desktop has sometimes got very, very small patterns. There's the gold right here. Hold on. Here's what we're looking at in the gold is what I think could happen in the next couple of weeks possibly, or even days. So put this up here. You'll notice we're getting up to this level here of 1380. And then that's what we're looking at is a big ABCD pattern coming into that level. We'll see. So the thing is, we've not had any correction here other than those three $20 corrections in the gold market. And so what we'll look at now is what happens over the next few weeks is what we'll see, or days, because we got a price objective of 1389 in the gold market that is pretty easy to spot. And as long as that uptrend continues, watch $20 corrections, because the first time you see one more than $20, you're most probably going to be looking at something that is going to be even greater correction. But right now, that trend is still higher. Last week, we talked a little bit about the cattle market and the hog market. I believe both of those markets are potentially bottoming. And if you'll remember, the Chinese are big buyers, and with their currency worth more now, they can buy more hogs and cattle. That also should help it. But just looking at the patterns, we've completed major ABCD patterns here in hogs and cattle, and they are ready to go. I'm not making a recommendation. I'm just trying to show you folks that this is what we're looking at. Finally, before we get Mr. Winsky on the line, this is what I'm looking at with the Bradley model and also the Dow Jones. You'll notice that we are right over this time frame where it really starts down strong. So that's what I'd be looking at. We have completed a Gartley in the New York Stock Exchange Index and also the Dow Jones Industrial Average. The NASDAQ made a new high, but remember that's only 20 stocks. So there's nothing, really looking at it. Mr. P, are you from Canada?
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have our good friend Norm Winsky from Astro Trends on. Norm, are you there?
Yes, sir, Larry. Good morning.
Good morning to you, my friend, and I hope this Hurricane Irma passes you by down there in Florida, but you're in charge of the show now. You can control your own slides, I guess, or they're going to control them for you, so why don't you go ahead and get started?
All right, we're on page 1, Larry, if you have that. And so I'm going to do a quick review of August. I was on just had the lunar eclipse there, which was on the afternoon of the 7th. Here we have my planetary index, which is kind of my version of the Bradley model. We have the days of the month across there for August, just starting on July 31 and running through August 25. You can see on the chart there's a lunar eclipse. If anybody's a regular listener to your show, knows that the market turned the next day, less than a day, less than 24 hours. It turned right there. There's the black bars. My black bars are the Dow Jones 10-minute bars, and the blue line was my forecast, which I did well in advance of the beginning of the month and published this in the August letter. We see here Mercury retrograde, what that can do. The Mercury had been going down, down, down into Mercury retrograde, and then right overnight there, it gapped up, and then we had a little bit of a rally there, and then we rolled over, went back down, and guess what? We bottomed right within a few hours of the solar eclipse, which was on the 21st. Then we rallied back up, and then we had a little pull back low into Saturn going direct on the, I think that was the afternoon of the 25th. And then we rallied strongly last week. So your major turning points were the two biggest turning points of the month were the lunar eclipse and the solar eclipse. That was, if you had that, you could have traded on those. You could have done quite well. All right, moving on ahead here. Here's what I had forecasted for August. In advance forecast, looking for a target on the S&P, doing some GAN mathematics here, trend lines and mathematics of 2487, right around the weekend, just ahead of the lunar eclipse. Since it would landed on the weekend, then you can advance it to Monday, the day of the lunar eclipse, and I had 2487. We actually topped just a few pennies under 2491, so I was off by a little less than $4 on that, and I nailed it within a day. Last month, we came on your show and talked about the solar eclipse. Why am I bringing it up again? Because I've done some more research, and I think as our good friend and colleague Bill Meridian mentioned, that the ancient astrologers all believe that the eclipses are just not specific to that day. They can also have sort of an influence for up to 3 to 6 months later. So I went back and researched. I talked about the big earthquake back in 1811 and that was in December, and found out that there was a total solar eclipse over North America in September of 1811. Matter of fact, I think it was I'm doing this from memory now, I could be off by a day, September the 17th of 1811, and 90 days later, that's important in astrology, 90 days, 90 degrees, was the big earthquake. If you were living back there in Terre Haute, then Larry, you might have felt that, the big.
Yes, I did. I was in school that day. We were in the 3rd grade. I was underneath the desk.
There you go. Anyway, so the reason I bring that up is because we had the big solar eclipse here on August 21. So if we go forward 90 days, that would take you to about November the 20th. We could have something happen right around the 20th of November of this year. So just following that pattern, not guaranteed, but interesting pattern to follow.
Yes.
All right, moving on ahead here now, we have here's a quick review of a few of the markets I mentioned last month when I was on your show. Here's the dollar. I gave you these key dates. How did those key dates work out? These arrows there show you how they worked out. The red arrows were misses. In other words, you would not have wanted to do a trade on those days. They did not work out so well, but the green arrows did. So there's a low there, the green arrow low, green arrow high, green arrow high. So we hit 5 out of 7. That's 71.43%. Here's your euro. I had 2 dates for the euro. I had one not so good and one that wasn't too bad. Right there in the middle of the month, you had a nice trading top there in the middle of the month, and I had that highlighted for the 14th of August. So if you go look at your charts there, I think you'll see you had a nice turn there for the euro. Moving on ahead, looking on ahead here now. Here's the key things that are happening here for September. Here you see I have ranked the top markets for the month. Stocks number 1. Look at the grains at the top. That's grains are usually on the list, but not usually near the top. And so you have soybeans and corn as some of the top markets potentially. and then the dollar and so forth on down the line. Here's what's happening right now. This past weekend, we had Mercury, actually it was this morning before the markets opened. I have it as the first after the close because we had the 3-day weekend. Mercury turned direct in Leo this morning at 7:30 Eastern time. And then we have also Mars changing signs and going into Virgo, which in general is the sign for grains and specifically for soybeans. You'll start seeing a repeating pattern here, a theme. And then we have the full moon tonight. I think it's early tomorrow morning, at about 3 in the morning Eastern time. And so here we go, Larry. One of your all-time favorite appearances, I think, of my being on your show was back in May of 2015 when we had the moon and Mercury lining up with their thing there. And so this is the opposite. This is the opposite of that, though. Back then, on the 18th, 19th of May of 2015, we had Mercury turning retrograde within 1 day of a new moon. Now we have Mercury turning.
Norm, you missed that high by 12 minutes, as I recall.
Well, I don't know about that. I'll leave that to you.
I think they still remember.
It might have been. I think it might have been a little more than that, but anyway,
it's close enough. Close enough.
There you go. Good enough for government work, right?
Amen.
So, there you go. So anyway, so now we have the opposite here, which is this is a rare alignment with the moon and Mercury. So we have a full moon tonight, and within less than 24 hours, we just had Mercury turn retrograde. So I think we're in an very important window here. And generally, we have want to watch for these grains and your precious metals and the stocks, all having important change in trend point here in the next day or so. Okay. So then moving on ahead here now, looking ahead, let's see anything else we want to talk about. Then the next big window will be next weekend. It's sitting here in Florida. I'm getting pretty antsy about that. Because they say the hurricane might get to me by next weekend. But anyway, we had the big, my highest energy window of the entire month is next weekend. We had huge clusters of things all coming together. Mercury, which is important for grains, is also there. So if the market doesn't top out now, or it might top out now and have a pullback, and if you're a bear, you want to see the market rally back up into next weekend, maybe get a bounce, retest, whatever. And then that should determine after that weekend, starting around the 11th of the month, whatever trend we start rolling on these markets, and particularly the stock market, we can start getting a trend going. That's probably going to rule into the end of the month. So if we start going down, it's probably going to go down all the way till near the end of the month. Or if it starts going up, it's probably going to go up till near the end of the month. We also have another important event coming here with Jupiter is an 11.5-year cycle to go through all those, all around the sun, go through all the zodiac signs, and Jupiter will be, and it stays in each sign about 11.5 months, and Jupiter will be changing signs here on that weekend. So it'll be shifting from Libra to Scorpio. Scorpio has to do with the cocoa, hogs, and bonds. Larry, I just heard you say a little while ago, you thought the hogs could be making a low there, and so there you go. Jupiter is the planet of abundance. When it gets in Scorpio, it could be providing, that could be a peak of supply of the hogs and a possible bottom. Sounds like we got the music coming, so we'll take a break.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, with Norm Winsky of Astro Trend. And Norm, we have a question regarding these aspects that we're looking at here of Mars and Mercury. Could you emphasize, more than you already did, the importance of these aspects?
Well, we have a huge cluster of lots of things here. And, if you want to give me a call, I'll be happy to go into detail, but I got a lot of material to cover here. And this could be I think this may be the biggest month of the year, so I don't want to miss talking about that. Coming up here, so we have, when I went to add up the numbers for my planetary index model, which is my version of the Bradley model, I ended up with like 2.5, 3 times the normal number of points. I think we could have a huge move here, and I think it's going to start maybe, if not right now, about a week from now. So I think that's important to tell the folks. Here's my big planetary points for the month. We have Mercury turning direct. That just happened a couple hours ago. We have Mercury at 0 north latitude. That's one of my top points. And then end of the month, we have Pluto turning direct, which, by the way, that has to do with hogs. You mentioned hogs. Also cocoa, and bonds. And, things like related to bonds like central banks, currencies, all that sort of thing, and so forth, the big finance picture. And so keep that in mind. We'll be looking at some things related to that in a minute. Here's my S&P, here's your hourly chart here. Notice that we're up near the top, the recent highs here, back in August high. And if we don't break out over here and we roll over and start going down, I think we're headed down. So unless we break out over that 2491 area, I think the bear scenario is still in force, and I don't think you have a whole lot of risk here because you're not that far from the high. So you got a very well-defined window for this to work. Either it's going to work in the next day or so, and that price area there, or it's not. Moving on ahead here. Here's your corn. I was eagerly waiting to come on your show, Larry, to tell you that, wow, this could be the big moment for the grains, because they were just going, here's your corn going down, down, down. And we had the big full moon and Mercury going direct, all coming together. And then the Thursday, Fridays, we had the big pop in the grains. And so that kind of spoiled my party. So now we got the grains back up to the top of their trading channel. So now we have a possibility that the grains could be making a high here on this full moon and Mercury retrograde. As long as we don't break this channel here, I think there's a chance we could roll over and go down. Obviously not as thrilled about the market being as oversold as it was last week. But, for a niblet on the corn there, you might try something just because we have the rare convergence here of the moon and Mercury. But if we break out over that, then that's your change in trend. It's going to accelerate to the upside. So we're at a fork in the road here on your grains, particularly your corn and your beans. Moving on ahead, here's your Japanese yen. The Japanese yen, I have a change in trend date for today, the 5th. And now here's a lesson here. The market is in the middle of the range. So if we don't have a good setup, probably take a pass on it. But I thought I'd throw that out. But what's especially interesting for the yen is later in the month, toward the end of the month, you're right about the time that Pluto is turning direct. There's the 26th. The central banks may be doing something to mess with the currencies. And so that could line up with the Japanese yen on the 26th. So moving on ahead here now, here's your, I also track the central banks. I'm able to astrologically sometimes forecast when the central banks are going to get active. And then we have today again for the Canadian dollar. And then there's another big date coming up next Monday for the Canadian dollar by way of the Canadian Central Bank. So there's your chart here. This one looks a little better set up because we're near the recent highs. So there you go. If you we can get a little bit more up there, that'll reduce your exposure and solve against this resistance here. And then perhaps we can roll over and you can get a good trade. If you break out there, you got to cut your losses and let the trend be your friend, right?
That's what the rules say, that make the trend be your friend. That's amen to that.
Amen, brother. All right, now we're moving on ahead where you can learn you can get all the free stuff. Hopefully I'll be here to help the folks. And so, for the people who don't know me, I've been doing this almost as long as you, Larry. So I've been studying the markets and stock market since I was 15. I'm 66 now, and started studying intensely in college. And then I went off to buy a seat in the early days of the Chicago Board Options Exchange. I was there from 75 to 87, 12 years. And so I've been following the markets, trading the markets from off the floor, or trading them, doing this all that time. So I started this letter, by the way, in 1978. So I'm coming up to my 39th anniversary at the end of October. All right, so you can get my letter for free and get a free class that goes with that. And just contact me. It's Norm at, here's my email address there, Norm Winski at embark, EMBARQMAIL.com, or you can call me on Skype at norm.winski, or here's my phone here in usually beautiful Naples, Florida, 239-594-3939, and looking forward to helping your folks, Larry. Now, if anybody has any questions, I'll be happy to try to answer them.
Okay, we have a question from one of our listeners from California, and that is, are the astrological things that are happening related to the hurricanes?
Could be, but that's as you would say, Larry, that's above my pay grade, you know?
That much I understand, Norm, that's for sure.
So that's not my area of expertise. I used to know a guy who was older. He's passed away now. He had studied astrometeorology for it's like 60 years. So that guy probably could have. That guy my friend that did that. He could tell you. I had a friend who was planning a party in Chicago. If you know Chicago, I call it yo-yo weather. It could be anything, And so he predicted the only day that was a sunny, nice day in a long string of bad weather, like in the early, late spring, early summer, And my friend had a nice party, outdoor party, and my friend got on the right day, So he could nail it down to a particular area and give you the day. But unfortunately, my friend has gone to the big weather forecast in the sky.
The sky. The reason why the person asked that is because when you look at the tornadoes and these big storms, you can see the Fibonacci spiral out there in the universe, where the clouds are, swirling around, making those Fibonacci spirals. That's why he mentioned that. But you just answered the question.
It may be related to two things. We have big concentration of these planetary clusters. That could be part of it. And then we also have, I forgot to mention that one of the reasons I think we're going to get a big move here in the markets, especially here in the U.S., is because it looks just awful for the astrological indications for the U.S. There's like two huge, very negative things happening here for the U.S. coming up. So I see, I hate to say it, but I think I can see Well, I didn't list those. Only did the first half of the month. But coming up like the about the third week of the month, there's some things that indicate, just disastrous things happening. Possible death and destruction. I usually don't like to bring that up, but it just looks terrible. Like, we're going to have some more big problems for the U.S. coming up here this month. So, so I think that may start having an influence on the market. So I think that you add that all up, and I'm not surprised to see another terrible hurricane out there. And there we go.
God, let's hope it's not Irma.
Yep. Well, yep. Let's hope it's Irma. Hopefully Irma doesn't like me. Goes somewhere else. Right?
Hey, thanks for joining us, Norm. We'll have you on soon, okay? And if you see something you need to tell us, let me know.
All right. Just have the folks call right away so I can answer the phone before the hurricane. Okay. And you don't have to be smarter than the fifth grader to do this. This is really easy to learn.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi folks, this is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, one good thing about Norm Winsky, he came right out and said that the market should go down. If it doesn't, we have somebody to blame. Thank you very much, Norm. It takes a lot of heat off of me. Okay, let's take a look here, tongue-in-cheek, boys and girls. As we can see here from the NASDAQ 100, it has made a new high. The composite, the 5,000 of the NASDAQ stocks, has not made a new high. Whether that means anything, I don't know. What I think means something is this full moon and the fact that we have these aspects occurring that were very similar to what occurred back in May of 2015. Now, the next chart we want to take a look at that helps describe what the market is doing is the New York Stock Exchange Index. This is the real market. This is the the stocks that really make the market move. And remember, this market of stocks is very, very small compared to what happens in the foreign exchange and in the bond markets. Things that are just absolutely totally different. Finally, what I wanted to bring to your attention is the chart that we got from our good friend Arch Crawford, and that just shows the fact that the number of 52-week highs, new highs versus new lows, is certainly not a bullish sign. Look back here at the top, back on May 20th. That was the day, the 19th was the day that Norm talked about the high. We had Mercury going retrograde at that time, and we had a new moon, and so this is something that's important. The fact that we have not taken out those highs from way back in there. That means that these 25, well, there's about 50 stocks, 20 in the NASDAQ 100, 15 of them in the Dow, and the rest of them in the S&P 500 that make these things, move, and the rest of them are not doing that well. That's the bottom line. Not many people talk about that, and, we could certainly be wrong, but boy, this is really an interesting one to take a look at here. There's no question about that, so we'll watch it. Keep an eye on these cattle and hogs. Those are the ones that look really interesting from a low-risk perspective. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.